Okay, welcome back everyone. So we're going to continue with question number 4. So in the previous session, we went through the question and discussed all the information. So now we're just physically going to do the question and show you how to set it out in your exam. Okay, so what I want you to do in the exam, there are specific things based on this information that you can see as easy marks, where there's not a lot of calculation that is required. So if there's things that you don't know how to do, start with the stuff that's easy, that doesn't need a lot of calculation, because you get marks for that. And the more of those you put on, the closer you get to that 50%. Okay, so let's go through the question. And as we go through, I'll show you sort of what were the easy items that you could do without a lot of thinking about it or all of that. So the first item we had was the sales that was earned. So you would have included the sales amount at the value for the 8.9 million. So this one is an easy mark. Okay, so it's 1 mark, just putting in the value. Then the next one was your local dividends, where you included and then you excluded, so you do the exemption. Okay, so you include the dividends for me, and then you show me the exemption. Those are additional 2 marks that are easy. You do not have to calculate anything. You literally just have to go write it down and do the exemption. So you've already got 3 marks out of the 60 marks by just inputting what they have given you. Then number 3, okay, so number 3 is the machine where we had to apply it. So that's slightly a bit more difficult, but it's not that difficult at all. So if we look at the Belvedere machine, you had to go apply the cost. Now remember we said that the cost is inclusive of VAT, so we have to remove the VAT out of that. And because it is a used asset, we apply 20%. And that would have given you an amount of 300,000 that you deduct. Now you would have received half a mark for applying the VAT, and they would have applied half a mark for the 20%. So this one, I'm going to make it green. This required a little bit more of input from you, but it is still not that difficult to work that out. Okay. Then the next one was our chestnut machine. So the chestnut was purchased as a new machine during the year, and we said you just apply the 40% to get to the deduction of 356,000. Now this one, because we did not have to remove any VAT from it, that would also have been a fairly straightforward mark. Okay. Then the next one is the microwave that we've purchased. Now this one is where you apply section 11E for your wear and tear allowances. Now, there were 2 things that you had to look out for. The first one was the fact that input VAT would have been denied. So you would take the value inclusive of VAT, and because it's less than 7,000, you would have deducted the entire value less the 1 rand. Okay, so you would have received an amount for stating that it's an attainment asset and input VAT is denied, and that the asset is less than 7,000, so you can deduct it in full. And if you deducted 1 rand from that, you would have received an additional mark for that principal as well. So by just deducting the full amount, you didn't necessarily have to give the commentary. This I've included in there. By deducting that, you would have been able to get 3 marks. So just deducting the less than 7,000, that would have been the easy marks, but the VAT portion would have required a little bit more input from you, so that would have probably been a bit more complex. Just remembering to take that the VAT was not claimed, so you do not take it out. Okay. Then the next one was the telephone system. Now we said the telephone system is also section 11E, and because of the fact that we've only used it for 11 months, we need to go apportion the wear and tear calculation for that. So we are going to divide it by the 5 years that they've provided in point number 17 in the question paper. And then we are going to apportion it for the 11 months, and that would have been 1 mark. Okay, so this mark would have been slightly more complex because of the fact that you had to go apportion that value. Then the research and development. So we said because of the fact that it is an approved expense, you would be able to claim the salaries at 150%. Okay, so that would be an easy mark, just applying the normal rules. And then the assets would be at 50%, the capital asset. Okay, so that would also have been an easy mark because of the fact that you're just applying the normal rules. And then the additional expenses for the testing and administrative costs. Now, because of that one is an exception to the rule, it's not a difficult mark to obtain, but it would have required you to actually know the exception. Okay, so that one I would then indicate as agreed. Then the next one was the fact that the computer was sold after numerous complaints. So this is a special inclusion in terms of paragraph JA. So this one counts 2 marks for knowing that it is a special inclusion. And they say this one is a bit more complex because most students would have missed this. Okay, so let's maybe make this one red or orange because of its complexity. So this one a lot of students would have potentially missed in their calculation. Then the manufacturing costs. So these are a lot of easy marks. Your manufacturing costs. So your cost of inventory, what you would do, let me just unhide it here. Oh, sorry. So this would also have to be included in here. This would also be, okay. So that inventory that you have sold, that computer, you would also have to deduct the cost of the computer as a sale. So you would deduct that amount because it would have formed part of your closing stock if it was in stock. So you would also deduct that. So that would also be a difficult mark to show the sale and to deduct the expense relating to it. Then for your manufacturing costs, your material, we said it is at your normal value that you've paid for it, the cost, that would have been an easy mark. The labor, you carry it over just as is, that would also have been an easy mark. Then the overheads is also cost that you've incurred. You just transfer it basically from the question. That would also be seen as an easy mark. Then your inventory balances. Now you have to remember that your opening inventory you deduct and your closing inventory you add on. But here you need to remember it's the lower of the cost or the market value. So in this scenario, those two would be slightly more difficult, but would still be considered fairly easy, just because of the fact that you have to go apply the cost of the market value. So based on the information, our opening stock, we would have applied the cost, which was the lower, but for our closing stock, we would have applied the market value, which was the lower of the two amounts. Then we also said that a cell phone was given for personal use to the marketing director. So we are giving it away. So for that one, you have to do the stock taken for personal use and we recoup it at the market value. So this would also, because of the fact that it's a recoupment, would be seen as you need to know the rule to be able to apply it. Then the next one was our debtors written off. Now here you had to write off the trading debtors and your staff loans you would not be able to write off because of the fact that it was not previously included in your gross income. So the trade debtors would be your easy one, where staff loan, if you don't know the rule, that could be potentially considered as a bit more complex. Okay, but not very difficult, just a specific exception to the rule. Then salaries and wages, as well as the contribution to your provident funds, those items you literally just enter as is, so those would be considered easy marks for your question. Then the penalties that we had paid because of the fact that our VAT was late, that would also be considered an easy one because of the fact that we know based on the list of section 23 that this would have been denied. Okay, so we literally just say it's denied, we show 0. Then we've got our donation of 45,000. Now we said that 45,000 would come right at the end, right before we do our taxable income calculation. So just before we do taxable income, we would do our donations to the PBO. Now that would be limited to 10% of our subtotal. Now, based on the figures, we know it will be more than the subtotal. So you could have actually already gone and put the 45,000 in here. And then once you get to the subtotal, just add this limitation amount on there. Okay, which would then be the other mark. Okay, so let's just go back. Then we've got our other general costs. So that is our other deductions that would be in terms of section 11A. We just include it as is. We do not have to think about it. So that is also an easy mark. Then we've got our legal expenses. Now here you had to distinguish between what is revenue in nature, what is capital in nature. Okay, so the first one relating to the transfer of documents, that is capital in nature. Now, if you did not know the rules, that would consider a little bit more difficult based on the information. The collection of debtors, however, that one you should be able to get right. So that would be an easy mark. Then we move on to point 16. Now, point 16 it has a lot of marks associated to it, and it's got a lot more complex stuff. So you can see based on the question, a lot of it is actually not difficult or just has a little thing that makes it slightly more difficult, but it's achievable. So number 16 is where a lot of the marks have gone to, but you would have potentially struggled with it if you did not know the rules. So let's quickly check just before we do the rest of it, how many marks have we actually allocated so far? So we have allocated 29 marks already out of the 60, and most of them are easy. So you can see we haven't even touched question 4.2, which is basically applying the requirements, which are easy marks as well. So just by applying the easy stuff, you could get to 50% on this question and leave out number 16 and do nothing with it. You could still get 50% for this question. Okay, so you see how you have to apply this when you do your exam. So if there are stuff in the exam that you struggle with, circle that information, leave it, do the other stuff first that you can do, and then go back to it once you have done all the easy stuff and then you attempt it. Okay. So then number 16, we said we had the factory building. Now remember, when we sell an asset, we first have to work out if there's a recruitment, if we had any capital allowance deductions. Now we know for factory buildings, we get a 5% per annum deduction in terms of section 13. So we know we need to go work out the recoupment. The fact that that additional note said that the recoupment will be set off against a future amount tells you there will be a recoupment. Okay, so they actually tell you there's a recoupment to try and guide you how to do the calculation. Okay, now how do we do the calculation? We start with the cost of the factory. But remember, the cost would be excluding VAT. So they've given you amount inclusive of VAT, so you have to go work out what is the cost excluding VAT, which was 1.6 million. Now we have to apply the allowances. Now you have to go work out how many years have we actually used the building for. So you'll see they purchased the building 21 June 2011. Our year end is end of June. So we would have applied it for 2011 already, 2012, 2013, 2014, 2015, 2016, 2017, 2018, 2019 is the previous year. So we would have already, up to the prior year, applied it for 9 years, that 5%. Okay. So this is where it's important to note that we do not apportion it. Okay, otherwise you would have worked out a different allowance amount here. And then we still have to account for the allowance for 2020, which is just the 1.6 million multiplied with 5%. Okay. Now for that, you would have gotten 3 marks. Okay, so you all with me? This is not complex, but knowing that you have to do it is probably where a lot of you would have missed the boat. So I'm going to make this orange because this is something that if you did not know you have to work it out, you would have lost the marks. So now once we've got the cost, we've got the allowances, we then work out what is the tax base. Okay, we would be able to deduct that 80,000 in the current year. So our tax base at the date we sell it is 800,000. Okay, now the recoupment is based on the lesser of your original cost or your sales value. So our sales value is 1.8, but our original cost is 1.6. So the recoupment would be based on the lower of the two. So that is why we state here the recoupment, the 1.8 million is limited to the 1.6, which was the cost, less the 800,000, which is our tax base, which gives us a recoupment value of 800,000. So an alternative way of working it out is basically all your allowances up here would also equal your recoupment down there. Okay. If the sales value was more than the cost. But we said we can defer that recoupment based on the rules. So we're not going to include it in here at the moment. We would normally have included it as part of your gross income, but because we're going to defer it, you leave it out here. You don't transfer that amount to your income tax calculation. Okay, now let's go look at the new building. Okay, so for the new building, what we're going to do now is we take the cost less this recoupment because we're going to defer it. So we take our 2.2 million and we deduct the 800,000 and we multiply that with 5% to get our allowance for the current year, which is 70,000. Okay. So this is what we are, this is how you do it. If you showed it as 2 separate steps, I would still give you the marks because you are still applying the principle, even though you split it up. But they actually want you to show it like this so that we know you know that the deferral would happen. Okay. But I will mark it if you've done the 800,000 and multiplied with 5%, added that as a positive, and then add the 2.2 million times 5%, multiply with 5%. Separate, I would give you the marks because you are basically doing what we've done here. Okay, so these would be your more difficult marks. Okay, but now we've worked out the recoupment. Now we're still not done yet. We still have to go work out the capital gain. As soon as I sell an asset, I need to go look, is there any capital gains tax? Okay, Now, I need the recoupment amount to be able to work out what is my proceeds and my base cost for my capital gain. So step one, you start with your proceeds. So the proceeds is the 1.8 million less the recoupment amount of 800,000. Okay, that would be included in your taxable income here. So our actual proceeds based on the adjustment is now only 1 million. Same with the base cost. We take the 1.6, which was our original cost. We deduct the 800,000, so our new base cost is 800,000. Okay, so the remaining allowances, which means our capital gain on selling that property was 200,000. Now that 200,000 you go put it into your capital gains column. Now in this question, we only had one asset which we sold, but they could potentially give you 2 or 3 assets that you sell, and then you have to add them all together. Now remember, what we have to do is we have to work out the aggregated capital gain amount. If we've got any assessed capital loss, you would deduct it from that amount to get to your net capital gain. Now, they haven't given us any additional information on that. So for this question, you would literally just take the 200,000 and apply the 80%, which will give you an amount of 160,000 that needs to be included in your question. Okay, and then once you've done the capital gain, you now go do the subtotal, which you require for your donations tax. So if you run out of time, go create a subtotal amount, and then you write here, deduct 45, limited to 10% of that amount. Now, based on the figures, you can see it's fairly high, so just write there, for example, 2 million, and then you apply the 2 million. That 10% multiply that amount is a method mark. So you get a method mark for just stating the fact, even though that amount is incorrect. Okay. And then the last step is we deduct the donations tax to get to our taxable income amount. Okay, so this would be an easy mark. So our normal tax, because of the fact that we are not a SBC, would be the amount times 28%. So this is easy marks. And then our tax liability is our normal tax less our provisional tax. That gives us a liability of 63%. Okay, so I'm just going to make this slightly smaller just so that you can get an overview. So if you look at this, look how many yellow marks and light green marks there are. There's only a few items which are really complex. It's about maximum 10 marks. So out of that 44 marks, you could get about 30 marks for that question just by applying the basics to the first part of it. And 40 out of 60 is already 60%. And then you haven't even done the easy stuff that follows. Okay, so this is how I want you to approach the exam when you get a question like this. Okay, so question 4.2 is a memo. Now, a memo you generally address to a person. So you write to who the person is, you write from who it's from, you give a subject. So in this case, it would be, for example, requirements for registering as a small business corporation. But any format, just the basic format, you would get a mark for the memo format. Okay. Then the first thing they want you to do is what should be done in order to qualify as a small business corporation. So you write there, dear Mr. Jacobs. Okay, in order to be regarded as a small business corporation, you would have to sell your shares in ABC. So that is when we read for the information, what we've identified is the issue. The fact that he has shares in another company, which is not allowed. Okay, so there's the first mark. Then the other requirements is now doing a table, listing requirements, and then applying it. Okay, so here you could have applied any of the following to get the marks. So the first one is your business must be a closed corporation, a cooperative, or any private company. Yes, MAVI-CC is a separate legal entity. They are CC. You get a mark for that. So you get 2 marks for stating the fact, the requirement, and 1 mark for the application. Okay, so you can see these 2 marks aren't difficult. This is straightforward. All shareholders must be natural persons. Okay, we read there's 3 individuals, so we know they are all natural persons. So there we've applied it as well. Okay, that's also easy marks. Shareholders or members may not hold interest in another company except with a specified few. Now, they haven't listed any of those, so yeah, you would list. Mr. Jacob owns shares in another private company, and I have recommended he sold it. Okay, and then none of the other members hold interest. So this one would be your more difficult one if you did not know that we allowed to hold shares in another company. We know your gross income must be less than 20 million. Now, based on our calculations, and you can indicate how you got to that, our gross income is less than 20 million. Now, for this one, you have to state, you get marks for showing how you got to your gross income amount. Now, if you did the tax framework, tax reporting framework at the top, you could have said as indicated in question. So then you can just say where to refer the calculation to. Okay. And then not more than 20% of your total receipts are allowed to be from investment income. Now, because your dividends are so small, they are less than 1% of your 9 million. So that would also be applicable. So you can see from this table, even if you don't know all the requirements, you would be able to get to the answer just by doing the basics. Okay, and then applying the information from the question. Okay, then part C is now they want you just to go list how is the allowances different from what you currently get. And they specifically note which ones you have to look at. So they tell you notes 4, 5, 6, and 7B. So they guide you which to go look at. So what you would do for that, just going to unhide it here for you guys, is you would state the fact that an SPC pays a lower tax rate than a normal company. It's based on the sliding scale. And that they get accelerated allowances for your capital gains. So these are normal facts that you can state. Then if you go look at the specific things they wanted you to look at, that machine, the chestnut, the new one that we've acquired, you would have been able to deduct 100% of it, where we currently only deducted 40%. For the microwave, it would have been exactly the same. That rule would be the same, whether it's a SPC or a company. For the telephone system, however, we would have deducted 50% as opposed to the 5 years that they've applied. I think it was 5 years. Let me just see. Yeah, for 5 years. So here we would have applied the 50%. And then the research asset would have remained unchanged as well. It would have been exactly the same. And then you would have concluded just what was the difference. That the one, how much they would actually save. Now you can see there are like 7 marks available and you only needed 5. So even though you have not done all of this, you could still get most of the marks just by stating the normal facts. Of the fact that we are paying a lower rate, it's based on a sliding scale, and we get accelerated allowances. Okay, so this is how you had to answer question 4. I know it's bulky, and a lot of students potentially would not have finished this type of question if you don't know the rules very well. Okay, so based on question 4, do you guys have any questions based on what we've discussed?